Hello, we are live. Thank you so much for joining me. Are you so sick and tired of hearing about GameStop by now? Well, maybe you're not sick of hearing about it. You may actually be somewhat infuriated by hearing about it. And I don't blame you to a sense. So that's what we're going to talk about. We're just going to talk more about GameStop. To me, GameStop is like the gift that keeps on giving. So we've got a couple of things to talk about. I want to get more into personal finance, why the stock market did what it did, nice little rebound, and talk about the important things when it comes to accumulating wealth, paying less in taxes, making sure your affairs are all in order, making sure you're saving for your child's college education the correct way, making sure that you have good personal finance habits. So that's what we're going to talk about. So what we're going to do right now, we're going to roll the intro, and then we're going to take a deep dive into this stuff. I'm going to make this nice, short, and sweet. I'm going to make it fun. So here we go. Stick around. All right, so nice to have you with me. Your time is very valuable, so I greatly appreciate that you've chosen to spend some of it with me. Thank you very much. My name is Mitch Goldberg. I'm a financial advisor with the wealth management firm Client First Strategy, and this is my live stream. I call it "Be the Boss of Your Money," because it's all about you being the boss of your money, not your money becoming the boss of you. You know, it's very easy for that to happen. We kind of lose control over things. We let, just life becomes more expensive as we get older, and you don't even know how it happened. You know, you look back and you're like, what the heck happened? So that's one of the things that we want to try to avoid. And I provide a little financial coaching here. I want to give you some good ideas to think about in terms of your journey. And if you look at your financial well-being as a journey, kind of like your weight loss could be a journey. Your meditation is like a journey. You're working out. You know, to me, content creation like this is a journey. I love doing it. There's a lot more to it than just cameras and microphones. It's just something that I find so personally rewarding and uplifting. And if you look at personal finance like a journey, you'll realize something. You know, personal finance and weight loss, or I should say dieting or healthy eating are very similar. Healthy eating habits as opposed to dieting. I have a friend who's a nutritionist, and we always talk about the similarities between personal finance and your health. They both need a plan, and you know, it's a get rich slow scheme. I'm gonna give you the get rich slow scheme right off the bat. Okay, if you put money aside in your 401k plan, every pay period, over a period of, let's say, 20, 30 years, investing in stocks, the odds are very high that you're going to have $1 million plus nest egg. That's your lottery ticket. If I promise you, hey, I'm giving you the winning lottery ticket. Here it is. Here's the lottery ticket. You just have to wait 20 or 30 years to cash it in. It's worth holding on to it. It's kind of like you buy a car, a comic book, some kind of collectible jewelry, and you expect it to do well over time. You don't trade in and out of your car. You don't trade in and out of your jewelry. Some people do, but by and large, you know what I mean. As consumers, we kind of buy things, we hoard things, we hold on to things. Be like that with your personal finance. Be like that with your stocks. Hoard your stocks. Put them away. Don't trade so often. Hold on to quality. That's really, personal finance in a nutshell. Let me just do a quick sound. All right, so we are okay. That was a good sound check. Thank you very much. Let's talk about the market, GameStop, because GameStop, in a way, it's like the gift that keeps on giving, and I'm getting a little sick of it, to tell you the truth. Oh, everybody looked at GameStop like, it's this new revolution of independent investors predominantly young, who have taken their place at the table of personal finance in the stock market. And before I come off like I'm knocking somebody, I'm not. I have clients who are millennials. I have clients who are Gen Zers, zillennials. And my clients are the retail clients. In fact, I have clients who have accounts with me, and they have some play money with, the Robinhoods, the M2 Finances of the world and all that. And I'm all for it. I'm here to help. Okay. There's enough business for everyone. But, people feel like they have their seat in the table. But in the back of my mind, I'm thinking, GameStop, this is what you decide you want to make your mark on. This one, that is unfortunate. Look, and I say that because GameStop, the concern is whether or not whether or not it's a going concern. You find your GameStops that you're like your worst, oldest, decrepit, strip malls. You go into a GameStop store, it's like worn, it's old, and they're selling games that, kids over the age of like 11 or 12 stop going to GameStop. I mean, it's fun when you're like, my kids are gamers, so I know this. When they were like 8, 9, 10 years old, it's a lot of fun. They get their Minecraft t-shirt, they get their games. Sometimes they trade in their old games. It's a fun experience. They enjoy it. But once they, get into Xbox and they get into PC, they don't go to Minecraft to buy stores. They don't even buy game consoles anymore. All the kids want to play now, they all want to be on a PC, which is like way, way better than being on a PlayStation or an Xbox. Okay. So they download the games. And sometimes these games have very short shelf lives too. They went from, World of Warcraft, and now then Minecraft, and now the kids now are all into Valorant, and they all talk to each other on Discord. And so I've learned a lot about the gaming business because I have kids who are heavy duty gamers. So short sellers do their due diligence, and I don't think calling somebody a short seller is an insult. I mean, people who are short sellers also go long. A lot of people go short stocks with either put options, or they outright short a stock to bet a stock could go down and profit from it. Or they could go long a stock, meaning they buy a stock, they own it. That means you're long a stock, or they buy a call option, for example. And that's how they do it. So people are like, oh, these short sellers. Short sellers have a valuable place in the market. Also, they help get rid of bad companies. Companies that shouldn't be in existence. And it's a shame what's happening, I think, with GameStop, because look, I'm one of those professionals I keep saying that you're annoyed with. It says, I know how this is going to end. We know how this is going to end, and it might not be over yet. But ultimately, stocks go to where they belong. That's the ultimate crunch, the ultimate truth. So the fact that people are shorted in a small cap stock, low price, and the conviction that the stock would go lower was so high, it seemed like easy money, that it wasn't just like 100% of the stock was being shorted. It was like 140% of the all shares outstanding were being shorted because of leverage, margin, options, because of leverage. And that's a big thing, because when you reverse it, you have to buy everything back that you were selling short. And it just creates this massive dash, this scramble to buy stock at any price, because if you're short selling, you're bleeding to death. You are just losing so much money so fast. And then we get into Reddit. Now, we're all the people who are on Reddit who started touting the stock and pushing the stock. If I had to bet, I'd bet that the people who started, who were originally behind it, they're probably out of the stock by now. And your less sophisticated investor who paid $200, $300, $400 for the stock is way down in the stock, wondering what the heck happened. People are talking about this going to 1,000. Oh, well, listen, I'm not saying it's over, and maybe it'll happen, but hope springs eternal, where they say the road to hell is paved with good intentions. So that's what's going on now with GameStop and the rest of the short squeeze cohort, AMC, Koss, BlackBerry. There's a few, there's more, there's about 15 of them. But those are the main ones, but GameStop epitomizes the whole thing. By the way, if you're watching this now in the live, if you have a question, hit me up in the comments. I love answering your questions. It's the best part of what I do. If you're watching this in the replay, I want to welcome you and certainly ask me any questions you have in the comments as if you were watching this in the live. I will be checking out for those. We've got somebody out there right now. My friend Ron, my audio check guy. Best shirt on the internet. Don't lose your shirt on the market. Audio equals 10. Bass not as muddy. Ron, thank you. First of all, thank you so much, Ron. I really appreciate you taking the time and that you actually take the time to help me out. For those of you who don't know, Ron is a audio expert. We met in a Facebook group for StreamYard. StreamYard is a streaming service that I'm using now, and I stream to StreamYard, and then StreamYard takes the stream and they put it out to Facebook, LinkedIn, YouTube, Twitch, wherever else I want this live stream to go. Right now, I have it going into a Facebook group, my own new client for strategy Facebook page. I have it going to my personal Facebook page. I have it going to my LinkedIn profile, and I have it going to my YouTube channel. By the way, if you ever want to catch replays, they're all on my YouTube channel. And then after all of these lengthy videos, what we do is we take little snippets, 30-second, 2-minute, 3-minute snippets from these videos. We just take out like the core, most important point of the whole thing. And then we put that out as a separate video on my YouTube page. It doesn't quite have all the nuance that comes with the longer drawn out conversation. So that is a big, it's a big part of what I do. So find me on YouTube. The name of my YouTube page is Client First Strategy. I'm on Instagram at InstaMitchG, and you can always connect with me on LinkedIn and check me out, Client First Strategy, on Facebook as well. So thank you, Ron. Just to let you know, I'm using a what's it called? Hold on, the high pass filter with the low cut. And what I did is I turned up the high frequency a little bit, let's say at 25%, and I lowered the mids by 25%, and I left the bass in the neutral, in the unity, in the unity position. And I feel like it sounds a lot better. Plus, I have the microphone a little further from my mouth, and I'm talking, I'm talking across the mic. Hopefully that'll help with the plosives. Filippo's out there. Got to lock in gains progressively. I am now short GME. Party is over. My goodness, Filippo, you're short. That is a testament to how your brain works, because you were along in GME, because you and I talk about this because Filippo and I are good friends, and you went from shifting that mindset to shorting. That, my friend, whether if this works out or not, that is a sign of a good trader, being able to shift your position when the facts change. That is, I'm really impressed, Filippo. I'm really, really, really proud of you and impressed. I'm impressed with you as a human being also, but that's a story for another day. So that is what's going on with GameStop. There are going to be the trend. The trend is your friend. Wiser words could not be said. So that's what's going on with GameStop. And now what you have, I'll do a quick share screen. Okay, and let me put my handsome mug in there. All right, look at that. I'm in the corner. Do you see me? I'm in the upper left-hand corner. How cool is that? Picture in a picture right there. I know I'm so impressed with myself with all my new toys, my technology. But GameStop in trading, if you can see where my cursor is moving, was down 60%, down $135 to $90. And if you see over here, a week ago is $483. That's like a $48 stock going down to $9. And it's down a little in aftermarket hours. BlackBerry lost 20% of its value from 28 to 11. But look where they came from. I mean, if you bought GameStop early in the 2, 3, or under 10, you still have nothing to complain about. But if you didn't take anything off the table and the stock was over 150, 200, 300, and you made money that fast, pure greed, my friend. Own it. Just acknowledge it. Own it. And just be better at what you do for the next time. BlackBerry down, Koss down 42% today, down another 5% aftermarket trading. Look at that, 80 cents to 127. I chose to sit this stuff out. First of all, I didn't even look at these stocks. AMC from 20 back down to 7. I look at AMC as a reopening stock, but I don't look at these stocks as something I would buy. I choose to sit these out because I am really I'm more about higher quality stocks. It's, these are just not my cup of tea. Keep in mind, I did a whole show yesterday on speculation, and it was titled How to Speculate Like a Pro, because there's nothing wrong with speculation. Some of the positives about speculation is that it could keep you engaged with your portfolio. You learn a lot when you do a little speculation. So it's fun, it's interesting, and you could make a lot of money. Some people are good at it. And I consider all these stocks very speculative. I think buying a biotech stock with no earnings or revenues just because they're coming out with a new drug or a vaccine, that's speculative. If it works, then it's a home run, AKA Moderna. It worked very well. You took the risk, you got the high return, right? If you bought Johnson & Johnson, I wouldn't exactly call that a speculative stock. You took the risk and you made a nice return. You have to know what kind of investor you are. You have to understand, how much of your portfolio should be in speculation. Typically, it's either none or just a little bit. But when it becomes your entire portfolio and it's all you own is Bitcoin and GameStop, and you made all that money and you didn't take it off the table, I'm sorry. That's just, that doesn't make you a trader. It makes you a sucker. Jumped on the bandwagon. There's some big news out. Amazon came out with earnings strong. Alphabet is up 6%. Alphabet is finally solidly over 2,000 in aftermarket trading. We've all been waiting for Alphabet to break that 2,000 mark. It was, so much lower. Its 52-week low is 1,000. But that's been like the laggard of the Fang Stocks, Facebook, Amazon, Alphabet, Netflix, Google, and Microsoft. Amazon's CEO, Jeff Bezos, is stepping down by the end of this year. So that's a big change, but he'll be the executive chairman of the company. All right, let's take a look. Market recovered a little bit. Yesterday was up a little bit. Today up 475 in the Dow. Nice day all around. The VIX, I said I need to see the VIX get under 25 for some comfort level. It's just about there. The VIX is something we like to see lower, not higher. But when it spikes like it did last week, which is the biggest spike I've ever seen, it's crazy spike last week, that told you that it was just, to me, when that happens, it's a knee-jerk reaction and everything reverses. And that's exactly what happened this week. So if you sold everything last week and you're buying it back this week, you're doing something wrong. Maybe you should just try buying quality, dollar cost averaging, and don't get jiggy with it. Okay. So let's take a look a little more. Gold off a little bit. Silver off almost 10%, so giving up a lot of the gains. Silver's a different story. I know that's like the next Reddit thing. The bullish thesis for silver is that it's being used in solar panels, energy-efficient cars, battery-operated cars. The need for silver is at least growing as an industrial metal as opposed to just a precious metal for store of value and for jewelry. So there is a bullish thesis to silver, but, I don't think silver is going to be the same example like everybody, the hedge funds are all short silver and it's going to skyrocket now. It's going to be a much bigger bus to push. Okay. Take a look at the Fang stocks, all the Fang stocks with the exception of Microsoft was off 14 cents a share. Who cares? But Microsoft just had a big rally from like 220 to almost 240. Facebook, Netflix, Google, Amazon, Apple. Good day. You're going to have a good, solid update in the market when these stocks do well, just because they're so big and they move the market around. Financials were the standout winner. Industrials. I put out 2 videos recently. Well, if you want to take a look at my YouTube page, if you're interested, I could link them in the comments. But I believe that for pockets of value, because it's hard to find value in this market. Financials and energy are the places to go for real pockets of value, where they're still cheap enough that in a downdraft, I don't think they get hurt too badly. And in an updraft, they do well, but they've got their own value metrics. Financials still have dividends, raising dividends. They haven't really participated in the bull market of 2020. Energy got hit really hard. And turns out enough energy companies went out of business that the stronger ones are surviving. Plus, both these sectors, financials and energy, cut costs so much that they've got massive operating leverage. So a little increase in revenues has a big impact on the bottom line, and operating leverage could last a long time. Okay. Filippo wants to know what site is this? This is the CNBC Pro site. That's right. CNBC has two sites. They have the professionals site and they have the regular site. So I have the pro site. I like it a lot. I think it's very helpful, and you get a lot of content that they don't put out elsewhere. So let's stop playing with the share screen, and I think that's about it today. So just wanted to give you a quick update, let you know where things stand in terms of GameStop. We'll probably see. We're going to see a committee in the House of Representatives, congressional investigation. The founder and CEO of Robinhood is going to have to appear before the committee, and the committee wants to find out what's going on, what happened, and then you'll probably see why there was a breakdown and what happened in the market. The whole idea is to protect the small investor. It's not to hurt you. So if you're a Robinhood investor, for example, and you're like really, if you are really just, thank you very much, Ron, for putting my website up there. I really appreciate that. So if my friend Filippo and I were speaking, and we're like, this hurts small investors. It's not fair. Robinhood is bailing out the hedge funds, the big guy, and us little guys finally have a chance. It's not really that cut and dry. I know a lot about this. Look, I said last week, I was the first one to say this. I didn't hear this anywhere else. I said they're probably in violation of capital ratio, regulatory requirements. And the problem is Robinhood and then its clearing firms, they're on the hook for the losses of Robinhood's clients if Robinhood clients don't actually make good on their debt. So if somebody is short, for example, a stock, you're short $10,000 worth of GameStop, not the biggest deal in the world, but it goes up to 200. You have a margin call almost $200,000 there. And if that happens to a lot of people, and some hedge funds we understand the losses were in the billions, if Robinhood can't make good on that, then the clearing firms are on the hook, and that has to be avoided. We have regulatory requirements in place to avoid another financial catastrophe, a financial meltdown. It wasn't because I think Robinhood was trying to screw over their customers with this. If anything, Robinhood's business is like a casino. I look at Robinhood like Candy Crush. To me, it's Robinhood. It's an electronic app like Candy Crush. Lots of bells and whistles and visually and audio stimulating things on the screen that just say to you, hey, come on back, keep coming back. Hey, these people are trading this. These people are trading that. Look what happened to this. Look what happened to that. Give this one a shot. Give that one a shot. And it just keeps you coming back. It's using social media engineering techniques to get people to trade a lot so that Robinhood could take your orders and sell the order flow to companies like Citadel and other firms who then pay Robinhood a tiny little fee for each trade, a little couple of pennies, maybe not even a couple of pennies. But if Robinhood could build up the volume, those pennies start to add up. So I think Robinhood is really in the business of being a social media company, but instead of selling advertising, they're selling payment for order flow. Robinhood is not a utilitarian force for good, a free thing for society, to benefit society and to democratize the stock market. I know that's how they advertise themselves. That's how they present themselves, but it's not. It's a business. And I think the Robinhood investors, the young Robinhoodies, maybe didn't quite realize that it's a business. And if you feel fooled or burnt by that, well, welcome to the club, because my generation went through this too. And the generation before mine, we all go through these same exact processes. You see, millennials and zillennials, you're no different than me, the Gen Xer, and the boomers before you. It's just some things are just repeating patterns. You know, this whole thing with GameStop, we saw this in the 90s with a company called iOmega. It's the same exact thing, the short squeeze. This has happened so many times before. All right, so I think that's about it. Let me get back to the main screen. Thank you very much for joining me, Filippo. 100%. It's like that. Yep. The casino is open every day. Listen, I agree with you. I think look, the stock market has always been considered, it's always been considered somewhat of a casino, depending on how you use it. I mean, does Warren Buffett consider the stock market a casino? No. If you're trading in Robinhood, you consider it a casino? Probably, or maybe you consider it a business. You know, it's like your own little personal trading business, and that's okay. But as long as you know what you're using the tools for and what you're trying to build with the tools, then it's okay. That's all I'm saying. Okay, not knocking anyone here. All right. Thank you very much. I'll be back tomorrow, and follow me on Instagram at InstaMitchG. Check me out. Please subscribe. YouTube, Client First Strategy. Connect with me on LinkedIn, and I'll speak with you soon. Thanks again.